Let's move to the next part. Now we're going to discuss the part number 7. So what is the part number 7? Today, earlier we discussed the part number 6, our second day. Now we are second day, we are discussing the part number 7. So what is the part number 7? Revenue recognition or revenue condition. What is the importance of the revenue condition? If we're saying the revenue condition, commonly we say, okay, how much the revenue you have. Based on you have 1 million, 10 million, 100 million, 50 million. So based on that, certain regulation from the accounting standard and certain regulation from the applicable IFRS or certain regulation from the tax regulation have the impact on that. While preparing the tax return, such regulation will make the impact, and you have to know that. And we have to know that and understand what are the impact and why this is important. So why we gonna discuss the revenue condition, because this again as a part of our comprehensive understanding today. Let's move to this topic. Here I added again from the return, from the corporate tax return, this section is added because the revenue condition, some selection is applicable and some condition are applicable. And what are that? So one of the revenue accounting policy and selection based on the revenue. So what are the accounting policy normally aware? We use the cash basis accounting or accrual basis accounting. So we have to notify to FTA which accounting policy we are opting. And this option is available to all businesses. The important part, this is available to all the businesses or not. So we will learn to which business or which revenue criteria is available. And if it's available, which way is beneficial. They can choose the accrual basis or they can go for cash basis. So this is the understanding or analysis as a part of the accounting team. We have to do the analysis and understand which will be beneficial based on the subject business operation. You might give the advice to the employer, to the company, to the client, or any format that you are working in the field. So let's see from this question, or this selection is coming from the tax return and it will be appear in the same way. I tried to make in the same fashion the question style design. I took the data and I from the FTA publication, and I'm just trying as a part of the presentation, as a part of the training, as a part of tax training, I'm trying to give you the insight of the tax return as well. Here, based on the revenue condition, we can take on the which basis we are preparing, cash basis or accrual basis. This is the option given by FTA, the Federal Tax Authority, as per the corporate tax law. The second, we have to evaluate, analyze, is this beneficial for us or no? This is the internal analysis you have to see. First, you will aware whether law is permit for that or no. If law is permit, now you have the option to analyze. So here, during the tax period, the tax period word is the accounting period for juridical person. We already learned that normally the corporate tax law, they will mention the tax period. We are saying the accounting period and tax period is same. There is no difference on that, except the natural person, that is the Gregorian calendar year. So their Gregorian calendar will be their tax period. So which industry, just for example, for understanding, I added here. So which industries normally use the cash basis accounting are suitable for them? Maybe small shop, restaurant, supermarket, bakalas. We very much commonly familiar with bakala. Not only small supermarket, because the supermarket, big supermarket also, they are like the Carrefour. like Lulu, and there is a big names that they are the big mall in the UAE, but we are talking about the small supermarket. So such business are use item. The mostly some industries are working in the use item like this. In UAE, there is a used car is a good market in the Sharjah. Very big industry in the Sharjah industrial area. Sharjah is available, and Dubai also there, but Sharjah is the biggest market. Mm, Mostly people are familiar with this industry or any other used market, so they are not only beneficial to having the cash accounting. They opt to use the cash accounting because they do not have much accounting team or the professional on board, but their business also support to them. Now here the revenue condition, but they're saying if the revenue is less than 3 million, the important part we have to understand, if the revenue of such businesses, if revenue of such businesses is less than 3 million, if less than 3 million, yes, then this is the option for those businesses. If revenue is exceeding 3 million, then you do not have the option for the cash basis. You have to opt only for the accrual basis. Now, the first option you can choose for the cash basis, or the second option you can choose for the accrual basis. And here we are discussing they might not have the appropriate accounting team, but here the accrual basis, because the cost of accrual based accounting will be more. The administrative cost will be increased. In a cash basis, the administrative admin cost will not be increased. So the accrual base, you have to select the prepare the books of accounts and keeping the record of the accounts in the appropriate way. Mostly people are using the accounting softwares. If we talk about the big multinational company, they're having the big ERPs like SAP, Oracle, or the another application. But that's normally the small business owners or the small clients, they do not have the budgets to have this such big system. So normally they use a small application. Commonly we use the QuickBooks, Soho, and the now in the mid-market size, the Odo is much of the good example that is in UAE. They are grabbing the market. So that Odo is the, we can say, in the ERP model, but is comprehensive because the Zoho and the QuickBook and the other application, they are only the accounting tool basic, but the Odo is a ERP model, and this is the they having the more share upcoming in the UAE as well. Although this is Germany based, I believe, if I'm not wrong. So they have a good share in the Europe, but now it's capturing in the UAE also. They added the localization also, the localization where the local rules are inbuilt, like the VAT and the corporate tax, the rules are built. So maybe people are familiar about that. Other businesses also are there. Let's move to the next slide and understand. See, this training is practically is the good understanding for the professional who already in the UAE, and also as well as the opportunity for the new professional who's coming from the home country and the part of job seeker in UAE. So they can also take the advantage and they can increase their job opportunities or the selection of in the interviewer eyes. It will enhance their percentage or chances for the getting selected. So now we will see the accounting standards. What are the accounting standards in UAE, and why we gonna use that, and what are the revenue condition for that? So the first accounting standard, we're gonna understand, we have to determine the taxable income under the corporate tax law by applying the applicable IFRS. So here now we've seen if less than 3 million, you can opt the cash basis. If above 3 million, you cannot opt the cash basis accounting. Now the another point we are saying, exception generate under revenue Here the accounting standard, because as a part of the accounting standard, mostly we are familiar the full IFRS and the small SME IFRS. The full IFRS, the cost of implementing the full IFRS is more. Admin cost will be increased because you have to see all the compliance and what is the, just for understanding why we are saying the SME IFRS cost is maybe the lesser and the full IFRS cost is more. Because then if you go for the full IFRS, if you go do any revaluation or any part of the, like commonly we understand the actuarial services or the property valuation or any other, that you have to take from the approved or certified valuator. So then you have to take more on the professional from that industry, take the certification from that. That is a third party service, that is the additional cost. Then you will add into your financial statement. But if your revenue is less than 50 million EET, if revenue is less than, so you have the option, you can go for SME. But still, it's not mandatory you go for SME, but this is the option is available. You can opt for the SME and you can prepare the financial statement based on that. Here, the other earlier I mentioned the third party, the application or the evaluator, that is not mandatory. That is because in SME there is many relaxation are there. So here the what is the SME and what are the full IFRS in the UAE? Just for our understanding, mostly we are dealing with the banks as a personal matter, personal credit card or personal financing or any format of that. So when we go to the bank, they will say, okay, your company is not registered with us because your company employees is less than them. So they have their own categorization. They are saying if you are exceeding the part of the 50 employee, you are part of the SME. But if you are from 100 to 250, then you are more than 250 employees, you are part of the big entities. So these definitions based on the financial institution or the other, they have their own reference. This is not from the IFRS. This is not have, because as per IFRS, there is no such guideline. As per IFRS, if the listed company, what is the listed company? That normally the company whose shares are traded in the listed stock exchange, they are listed company. Recently, if we familiar in UAE, the DIVA, the way electricity authority, they listed, I think 1 year before the part of the they launched their IPO. Earlier it was the state owned and now is the public listed company. So now the Diva market, they are launching a lot of new substations, also projects also, to facilitate the new development in the UAE also. So this is, I just share this understanding to have the better understanding. But here in the taxation point of view, if the turnover is less than 50 million, yes, you can go for SME, IFRS SME, and there is no mandatory requirement for the audit also. If your company revenue is less than 50 million, there is no mandatory requirement for the audit also. But still, as you are preparing the IFRS compliant financial statement, then you're able to proceed with the return. So then if practically we're saying, so maybe this is required. This is required to understand how the things will be moved forward. As long as you are preparing the financial statement, and mostly small company, they do not have in-house team. If they do not have in-house team, for sure, they will take the external services. Yes, in the market, there are many consultants also available who support the preparation of financial statement as per applicable rules and regulation also. Let's move to the next. Here, the important learning we see in the less than 50 million, we can opt for the SME, and the less than 15 million for the mainland companies. Again, the important part, the mainland companies, audit requirement is not mandatory, but as part of the free zone, the mostly free zone itself, they by default, they have the requirement from the free zone authority, you have to submit the audited financial statement every year. So now this is their regulation. So corporate tax, as earlier also I mentioned in first session, the corporate tax, they consider the existing regulation. While considering the existing regulation, they did not make changes. They align their regulation as part of the existing regulation. So as free zone is saying, audit report is mandatory to, as per the FTA, the corporate tax law, the audit report is mandatory for free zone as well. Even the whatever the revenue for the free zone audit report is mandatory. Let's move to the next point. We will discuss in detail. The free zone is another comprehensive topic and the very interesting topic. Mostly the industries or people are working in free zone. They might get in touch with me. I can give you insight on any specific topic, also any specific issue they are facing. What is the applicable requirement in that specific scenario? But inshallah, we'll have the detailed discussion in that session also. Taxable person shall follow accrual base of accounting when preparing the financial statement. This is already we discussed. An exception taxable person may follow the cash basis when preparing the financial statement, but if the revenue is less than 3 million. Election for realization base is also available. Election topic we will discuss in detail. Here's another point I just want to highlight. If you opt for the cash basis accounting, and your because now you have the option and your revenue is less than 3 million, but next year is increases that more than 3 million, you have to notify to the FTA and go for the accrual basis. And it is vice versa also. If you having less than 3 million, but you offer the accrual basis, you may apply to the FTA and give the circumstances and whatever the explanation, and you might come back to the cash basis, but subject to the appropriate clarification that you provide to FTA and subject to approval based on the applicable condition. Now our interesting topic, that is the taxable income. The taxable income. So we're gonna discuss the taxable income, but before discussing that, we are just now discussing the IFRS for SME, the financial statement. So what is the financial statement? How many components in financial statement? This is the important part. We will understand the financial statement, the audit report, normally in which the financial statement are there. The 5 components what we are seen in the financial statement: the income statement, balance sheets, cash flow, equity, notes to account. This is commonly we are familiar, but actually the financial statement components are 6. But commonly we seen 5, but because IFRS allow us to make 5 or the 6, but practically is a 6 statement. So what is the 6? Because income statement, they have the other comprehensive income. Other comprehensive income, IFRS allowed to be part of the comprehensive income, or the prepare the separate other comprehensive income. This is the important part for our understanding that have the impact while preparing the taxable income. Because normally the taxable income preparation, we have to do some certain adjustment. But that this important concept will help us while doing the adjustment. We will go through this important part and during our session. Here I'm highlighting why, and we will see some example also where is shown the other comprehensive income and what are the impact. So taxable income, normally we are familiar the taxable income, if on business is earning the income, they have the associated expenses. That is a purely for business. There is no private element that is the deductible. If there is some private element, then there is the applicable tax guideline a tax regulation, we have to follow that and do the adjustment. Normally, we prepare our financial statement as per applicable IFRS that we already seen. Once we prepared our financial statement, so after that, now here, as part of this training or as part of our understanding, we have to understand one important part. We are discussing as a tax accountant, a tax professional. The same time, our responsibility will not be the preparation of financial statement. Preparation of financial statement is part of the financial team or the accounting team. They are working on that. So we have to, even while giving advice to the client or while negotiating with our clients, we have to explain this part also. If you need this service for the taxation, this our responsibility, our scope of work is the start from the taxable income. But you have to give us the financial statement that is prepared as per applicable IFRS. But mostly the issue or the reason of the financial statement, maybe mostly people are not following the applicable IFRS. So that may not be appropriate. The tax professional or tax accountant may end up with the wrong return submission because the previous data that come from this area is not compliant as per IFRS. So this is also important, and we have to notify if we are working as a tax professional or a consultant or even the accounting team. We have our keen area. This also need to be improved, need to be refine as per applicable standard also. If this is appropriate or if this is done as accurately, then that tax accountant or tax professional job will be started. So now tax accountant or tax professional take this IFRS prepared financial statement and he will take this data, accounting profit before tax, and from this IFRS prepared financial statement, he take from here and he will start making the adjustment because some expenses that have the private element, the tax law is saying is not deductible. But in accounting team, as per accounting is already deducted, he can make the adjustment considering that. And some income they already deducted, but tax law is saying no, you have to add back. So we have to understand this adjustment in detail. This is the preparation of the tax return or the taxable income. We are starting from the accounting profit before tax. This is the important part where we are earlier seen the other comprehensive income. We are not starting our tax calculation from the other comprehensive income or TCI, total comprehensive income. The word TCI, total comprehensive income, we are taking from the accounting profit before tax. Let's move to the next. Accounting profit calculation. As per the accounting standard IFRS, because the accounting team, they have to prepare the financial statement as per the applicable IFRS. Then the data or the transaction will, the financial statement will hand over to the tax professional or tax accountant team or the tax department. Here we have to understand we are trying to learn the taxation also, but it's not important. The same time you work as a part of accounting team or same time as the taxation team. Maybe people are working under tax department and they are not working under the accounting team, but still they need to know the IFRS. Why? Because if they know the IFRS, so they can differentiate, okay, this adjustment is not there. They can analyze the financial statement better than the person who not background from the accounting team. Because in the tax profession, the many people, they are from the legal background as well, or any other background as well, because they are the tax people. They don't have to know the accounting. They have to know the law and apply on the accounting data. But they might do mistake. They might end up with the mistake because that is not their mistake because the financial data is inappropriate. So they cannot identify your financial statement is not appropriate. They will prepare the tax return as per the provided data, and they done their job, but the ending up with the error or the low taxable income or excess taxable income or the tax optimization strategy. What we can say, they may not give you the tax optimization strategy versus the person who knows the IFRS. And the IFRS, normally the ACCA, ICAW, or the CPA, or any other professional body, they commonly knows. Here's another part: the gap. Gap is not in UAE. Gap is not UAE. Here they recommended in the city law and the FTA publication the IFRS. So keep in mind, our financial statement will be in IFRS. Even the multinational company who are preparing their financial statement to be part of a group, but they have to prepare the local financial statement as part of the applicable IFRS. So IAS, the mostly accounting standard, the previously is used commonly. Now they are converting IAS accounting standard to IFRS. Practically both are same. But we can say the IFR is the latest version. All the previous IAS will be converted to IFRS. As of now, there is a difference. Total is 41 accounting standard, but from the 41, only active or live is 24. Other is obsolete or they deactivated or based on the latest study or the evaluation, they make them obsolete. So active IFR is only 24 out of 41. And from the whatever the obsolete, the word we use, they are converted into the IFRS. So as of today, is the 17 already is there, because whatever the obsolete they converted to IFRS, 17 is there, or 18 because there is the IS1 that also converting to the IFRS also. IS1 will be converted to IS18. Mostly the publication already there for the same. And we mentioned the new IFRS replacing the IS1. Just we will see a couple of the standard as a IAS that previously part of IAS now is part of IFRS. IS 17 converted to IFRS 16, IS 18 revenue converted to IFRS 15, IS 14 segment reporting converted to IFRS 8. Accounting point of view, audited financial statement. Here we discuss the quoted company and unquoted company. Here we, for understanding, we are saying the quoted or listed company, they will follow full IFRS. Apart from that, all other company, as per the IFRS, they can follow the SME IFRS or full IFRS. But the tax, UE tax law, they given some condition. They said less than 50 million. You have the option to follow the SME IFRS. Unquoted company, they can follow the SME IFRS. It is choice for the unquoted company, they can follow full or the SME. But while considering the choice from the IFRS, we have to see what is the local regulation. When we talk about local regulation, corporate tax is a local regulation. So their condition is a 50 million, so we have to follow the local regulation also.